Ever wonder how people get an infinite return? How people can actually borrow money against their own money? This video was inspired by Carlos Garcia, who asked me this question. I'm going to paraphrase his question. Why would someone pay their mortgage down at 3.5% when they can invest that same amount of money into stocks and get an average return of 10% a year? That's a great question, and I will be answering that question later on in this video, but I want to show you how to get an infinite return. And by doing so, it can actually give you a better insight on what you should do in your situation. If anyone watching this video has a question they want me to answer, go ahead and leave that in the comments down below, and I'll be sure to answer that in one of my next videos. First off, I'm not a financial planner and I'm not a financial advisor, so all this information is for entertainment purposes only. So with that out of the way, let's get into it. So for an infinite return, we're going to use, let's just say $200,000. Let's say you have $200,000 invested in some stocks. So what that's going to do is, let's just say $200,000 right here. What you're going to do now is you're going to go to your brokerage, whoever you have this $200,000 invested with, and you're going to ask them if they do security-based lending. What that is basically, think of it like a credit card against your stock portfolio. So if you have $200,000 in your stock portfolio, they'll give you, it depends. So your different brokerages have different requirements, different restrictions. Let's just say they give you, 80% of the value of your property. Now that's going to be $160,000. $160,000. And whenever they do this, again, it just acts just like a credit card, but you're not getting the crazy rates like credit cards. Sometimes you're going to be getting 2 to 3% interest rate on these. On this amount of money. So what you can do is you can actually pull this money at this $160,000 and you can invest it into a rental property or whatever it is. And here is the great thing, like this tops everything. This is what I want to talk to you about with infinite returns. You're not pulling out your $200,000. You are keeping that in the market. So while this is earning 10% on average for the S&P 500, roughly 10%. So every year you're getting, a 20K, and you didn't pull this money out, but you got a line of credit basically against this $200,000, and you're using this $160,000 to go buy an investment property that can be paying you 10, 20, 30% cash on cash return every single year. It doesn't have to be an investment property. You can buy businesses, whatever asset that you want to buy. You can do that with this line of credit. Now use that asset to pay back the line of credit that you borrowed from at 2 to 3%. Whenever you pay that money back, now it's an infinite return. And you just use someone else's money at a lower interest rate to go buy an asset that's going to be paying you every single year for the rest of your life potentially. Now this is the reason why you would want to do this rather than actually selling off your stock, your portfolio, your securities, is because whenever you do sell them, you're going to be getting, either short-term or long-term capital gains tax. You can avoid those capital gains taxes by getting a line of credit against your securities. This is a fantastic way. So instead of paying 20 to 30% in capital gains tax, you're only paying 2 to 3% on interest. But before I go any further, if you're getting some value out of this video, go ahead and hit that subscribe button down below and click the bell icon to get notified when I upload a new video just like this one, helping you achieve your financial freedom sooner. Like I mentioned earlier in this video, all brokerages are going to be different. So some of them might not even let you do this. Some of them have different requirements, some different restrictions, might have a higher interest rate, whatever the case may be. You just need to know that everything is different. Now, this is also what you want to keep in mind if you decide to do this, is if your securities, your stocks, go below the amount that you pulled out. Let's say you pulled out that $160,000 that we were just talking about. You pulled out all that money to go buy an investment property. Now, if your portfolio, your stock portfolio, it dips below that $160,000, then they're going to be selling off your assets to pay them back because they lent you out money. I'm not sure all brokerages do this, so you want to ask your own brokerage if this is something that could happen. Now, Carlos, to answer your question about if you should be paying off your mortgage at 3% or continue investing in the stock market at an annual return of 10%, this is kind of down to personal preference. If you like the idea of being debt-free and you want to eliminate a lot of your interest, start paying down some of your mortgage, because over the long haul you will be paying, actually let me start with this. The interest of your mortgage is going to be front loaded. So you can buy a property today, like 90% of your payment is going to be interest. Like the let's just say $1,000 is your monthly payment, like $900 of that $1,000 is going to be towards the interest, $100 is going to be towards the principal. Now, whenever you get to about the 15, 16, 17 year mark, that's when the principal starts exceeding the interest. So if you were to actually pay down your mortgage principal, the interest that you would be paying over time would be substantially less than they would be, if you didn't pay your principal down. But if you're okay with having the debt, if you're okay with, having a bunch of interest charged to you, then I would suggest you go and invest in the market. Or better yet, the money that you said you have in your savings account, which is for anyone else watching, Carlos, you said you had $56,000 in savings right now, and the rest is in, stocks and bonds. What I would do, again, not financial advice, I would use that $56,000 and get a line of credit against your stocks to actually go buy real estate. Because like here on this YouTube channel, it's all about real estate investing. Yes, I talk about finances and personal finance, but I'm a huge believer in real estate. If you can use that money to go get a 20 to 30% return on your money with real estate investing, that's something that I would do. That's just my 2 cents. Now, if you have questions of your own, go ahead and ask those questions in the comments down below, and I'll be sure to either answer them in the comments or I'll make a video just like this one. If you got tons of value out of this YouTube video, go ahead and hit that like button for me and turn it blue so the YouTube algorithm can push this out to more people so they can get value just like you did. There's gonna be videos popping up all around here that I picked out specifically for you to bring you even more value than I did in this video. So go check those videos out. Until the next video, I'm out. See ya.